firm iRobot risks being derailed unless the firm fixes a list of competition concerns highlighted by the European Union's antitrust arm. The European Commission in Brussels issued a so-called statement of objections today. iRobot shares again down 19.5%, while Amazon is up 1%. Elliott Investment Management has revived calls for changes at Crown Castle after disclosing a roughly $2 billion stake in the tower operator. And with more on that story, here's Bloomberg's Kimberly Adams.
Charlie, in a letter, the activist investor said Crown Castle should install new management and board leadership, conduct a strategic and operating review of its fiber business, optimize its incentive plan, and improve corporate governance. Elliott also said it intends to nominate new directors for the majority of positions on Crown Castle's board at the U.S.-listed company's 2024 annual shareholder meeting. Elliott managing partner Jesse Cohn says, quote, the company's stock price is near 6-year lows, and the underperformance we highlighted in 2020 has only worsened, unquote. So far this year, Crown Castle shares are down 23%. Charlie? And
that's Kimberly Adams reporting, and today we're looking at a gain for Crown Castle. The stock is up by 4.2%. And those are some of the top company stories that we are following for you at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
We are live from Washington, where we keep you up to date on the fastest show in politics every half hour with Nancy Lyons. She joins right now from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Israel and Hamas are agreeing to extend the 4-day pause in fighting for another 2 days. That's been confirmed by Qatar, that says conditions for the ceasefire will remain the same. U.S. National Security Council spokesman John Kirby says it's unknown if Americans will be included in those released.
As it has come out over the last 3 days, we don't really know until you get into the end game who's going to be actually on that list, and then even then you got to watch closely to seeing if who's on the list is the folks that actually come out. So we're watching and open.
National Security Council spokesman John Kirby. On Sunday, a 4-year-old girl with U.S. citizenship was released, but her parents were among those who were killed in the October 7th attacks. President Biden does not plan to attend the COP28 climate summit later this week in Dubai, although no official announcement has been made. The U.S. delegation preparing for the annual climate talks has been told not to expect the president at this year's event. That's according to people who've asked not to be named because the information is private. We get more on this from Bloomberg Government Congress reporter Zach Cohen.
We're not clear why President Biden is not attending this particular COP summit, as obviously other pressing foreign policy matters that might be requiring his attention in Ukraine and Israel.
Bloomberg Government Congress reporter Zach Cohen. The Global Leaders Summit that opens COP takes place on Friday and Saturday of this week. Memorial observances for former First Lady Rosalynn Carter have begun with a special wreath laying at her alma mater, Georgia Southwestern University in Americus, Georgia, followed by a motorcade that's now traveling to Atlanta, where her body will lie in repose this evening at the Jimmy Carter Presidential Library and Museum. 2 funerals are planned, one for tomorrow in Atlanta that President Biden and First Lady Jill Biden will attend, then again one on Wednesday in the Carter's tiny hometown of Plains, Georgia. Both services are only for invited guests. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Joe and Kaylee.
All right, Nancy, thank you. Don't read to the end yet. This is very important stuff we're talking about. The word of the year. If you were with me an hour ago before Kaylee joined, you already know what it is. Taylor Swift likes to talk about her authentic voice, seeking her authentic self.
Yes.
And it is the word of the year, authentic. This year of deep fakes and AI. I guess that shouldn't come as a shock. You may have been talking about this yourself. Merriam-Webster's lexicographer, great title.
Yeah.
Peter Sokolowski, with the line of the year, I would say. Kaylee, we are now recognizing that authenticity is a performance in itself.
Oh.
That's how much fake is out there. Think of the deep fakes, the political ads, the people cheating on. Can you imagine going to school with ChatGPT at your side?
Oh, totally different.
This is how people are growing up now. So authentic
Who's going to have to write an essay
something.
anymore?
That's correct.
And it's kind of probably not a coincidence, Joe, but deepfake also appeared on the runner-ups list.
Yes, absolutely.
As did
dystopian.
Dystopian.
What do you think of that? This is the world we're living in.
And people are potentially worried that robots are going to take it over? Is that?
See, and I will recommend that you all see this film because we're now living in it. I just didn't think it would be part of our reality, where you have to tell the difference between the replicants and the real people. But I keep going down. Coronation was another one. And then there was one that had Kaylee Lines written all over it. And of course, this is based on searching, right? People search for these words, which is how they get
I probably contributed
I think you
to
did.
A large degree to this.
Because you brought it to us on the air once already. That word would be implode.
Yeah.
Your greatest fear.
This goes back to the Titanic sub from earlier this year, the submersible that disappeared, apparently imploded in on itself. And for the record, in case listeners, you don't know this about me, I am very concerned about being buried alive or trapped in a submarine.
Implode is Kaylee Lines' word of the year. All right, we have much more to talk about on Balance of Power. I'll meet you there later on. Bloomberg Business Week starts now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a happy Monday, everyone. Good afternoon. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. It is Monday, November 27, 2023. Carol Masser, my co-host Tim Stenevec, is off today. Bloomberg News equities reporter Bailey Lipschultz is in the house, and I feel like it's on a day when the equity market is, again, kind of like Friday, a bit.
Super sleepy. Volumes well below what we've been seeing the last few months. It feels like maybe traders taking advantage of Cyber Monday and not trading stocks.
Are you shopping?
I bought a treadmill on
Friday.
A treadmill. That's
Not
really it.
A gift for yourself?
Yeah, really needed to invest in the home gym.
I get it. All right, so stocks a little change. You've got Treasury yields, though. They're lower. We had some mixed Treasury auctions. We're going to get into that. We also, I feel like, Bailey, this whole, I don't know how many months, I feel like the whole year, it's about, the Fed. Done? Are they not done? Higher for longer? But right now it does feel like there's a growing consensus that the central bank here in the U.S. is done with rate hikes.
Yeah, and we're seeing swap market pricing in 3 rate cuts next year,
it's
which
pretty
is aggressive, especially with Jay Powell being as clear as he could be that higher for longer is here to stay.
Yeah, and we're going to talk about this. It's really fascinating. A great story. It's among the most read on the Bloomberg about, we are seeing the consumer out and spending on this Cyber Monday, saw it on Black Friday. But what's interesting is the U.S. is really, they kind of are ticked off at the U.S. economy. Inflation has come down, but we are still paying more than we were pre-pandemic.
Exactly.
Everything, it feels like.
Services, goods. Carol, I don't know about you. The last time you went to a grocery store, I feel like no matter what, I'm spending $100, even if I'm not buying more than 1 or 2 meals for the week.
Bought stuff to make a pie, $75. It was unbelievable. A little piece of advice, don't buy pecans. That's all I'm going to tell you. Or flour, or sugar. All right, we're going to also get into the trade this year that wiped out billions for investors. It is our most read story on the Bloomberg. Used to be kind of a safe trade. I feel like we're not going to tell everybody what it is, but we'll get into it because I feel like we've had a lot of guests saying, here's what you should be doing in this environment, but it's not paying off.
Yeah, the lone hint is it's not going short the Magnificent Seven.
Good hint. We're going to get into geopolitics. Israel-Hamas agreeing to extend their truce in Gaza for 2 more days. And then we've got Elon Musk in Israel. So we're going to get into what that means. And then we're going to talk a little bit about the venture capital market, Bailey. It's not been an easy one.
No, it's been a tough environment. Interesting to see what's going on the other side of the pond.
Yeah, exactly. Good point. Overseas. Speaking of overseas, Steve Schwartzman is overseas, Blackstone co-founder, chairman, and CEO. Looking at European real estate and more. We're going to get into that. And then we're going to talk about what's going on some college campuses when it comes to recruiting. Right now, it's markets. Countdown to the close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Bailey Lipschultz in today for Tim Stenovic. Welcome to our audiences across all of our Bloomberg platforms, television, radio originals, and our partnership on YouTube. Happy Monday, Carol Masser. Not a whole lot going on in the market today, but of course all the talk about consumer spending.
Yeah, absolutely, right? Cyber Monday, Black Friday, looks like the consumer's out and spending. But I mean, what a great deep dive by our Bloomberg News team basically is looking at what we are spending for everything. We talk constantly, right, about inflation being down a lot in the past 12 months, no doubt about it. But prices are still higher than they were pre-pandemic levels. So you're talking about everything from groceries up 25% since January of 2020. You've got used car prices up 35% since then. Everything is still costing us more than it did before the pandemic. And Bailey, that's hurting all of us. And that's why we're kind of ticked off at the U.S. economy.
Exactly. And right now it's cost $119 to buy the same goods and services that a family could afford with $100 before the pandemic. Carol, you mentioned it. We're seeing double-digit jumps across the board at grocery stores. We're seeing people paying up more than 34% jump in the cost of beef, coffee up 23% over the last 3 years. So everything getting more expensive, even when you're trying to buy cheaper at the grocery stores.
Right. Inflation, right? Not as significant, but it just means we're, going up at a lower rate, right, Romaine? I mean, we're still going up.
Lower rate, but there's a lot of psychology built into that too, Carol, because when you talk about everyone looking for deals and not really finding them, at least not in the way that they would have expected to see them this holiday season, I wonder how much that plays into it. If you're already affected by high prices, and then you look for these holiday deals and you only get 20, 25%, I wonder, is that sort of the marker where you just say, I'm not going to do that? And we were speaking with a couple of economists earlier today who said, look, a lot of the purchases we're going to see this holiday season are going to be much more necessities rather than discretionary.
Interesting. Staples coming into play. Let's talk a little bit about
and who doesn't like a can of soup for Christmas?
Who doesn't like a stapler? No,
I'll take anything you'll give me, really. Free food, I'll take it, even if it's in a can.
I'll remember that. Right.
Let's talk about the stock market.
Popcorners for Katie.
We've been talking about this bid for cash, this bid for safety that we've seen in the market really all year as the stock market gyrates. But there's a really great story out on the terminal by Emily Griffeo, one of the most read of the day, taking a look at dividend ETFs. These things were all the rage over the past few years, but you take a look at actual performance and they've really, really lagged. Maybe no surprise. You think about some of the companies in these dividend ETFs, and it's not the Magnificent Seven, the big tech type exposure that you're getting in other benchmarks. And as a result, you take a look at performance and you've gotten burned if you're one of the many investors who rushed into these things.
Well, that's what I'm curious about too, because I mean, we've seen this trend play out over the last few months, and I guess, does it come down to this idea of sort of what's in these ETFs, right? Like if you're not going after the big names like a Microsoft or something like that, and you're dealing with companies that do have cash flow issues or they have refinancing issues, is that what's scaring people and keeping them from going into these stocks?
Yeah, I don't know. It's kind of interesting because I do feel like we've had a lot of guests on over the last, 3-4 months that are saying, hey, here's a great way to do it. Look for those stocks that are paying high dividends. But if ultimately...
But did you see the names in that ETF, like the one that Katie had on the board? I think it was the Schwab. I mean, Broadcom is the biggest holding in there. Amgen, Coca-Cola, Pepsi, Merck, Home Depot, AbbVie, Texas Instruments. I mean, all great names, all great brands. But if you're looking for a real payout down the road here,
that's not it.
You're going to look for something else.
Yeah, it's not playing out. But the one thing to keep in mind, though, the group did return in 2022 almost 2%, and that coming with the S&P obviously taking it on the chin. So a bit of a reversal. It'll be interesting to see if people hold on to those losers, though, into 2024.
And you should do a thing. If you run EQS on the Bloomberg terminal, you can kind of sort through this. And I would challenge everyone, take all those names and look at their dividend yield and then stack that up against what you can get in the bond market, in fixed income, even in the commodity space. I mean, this is competition for return right now, and it's tough competition.
Yeah, and it's really hard to, once again, kind of outpace some of those growth names that they just continue to, despite everybody saying, okay, they're either overvalued, it's time for them to take a break, they continue to, outperform, and it's hard to kind of beat some of those returns. All right, guys, we're going to...
I didn't hear Bailey. Did Carol actually say what she got me for Christmas on this Cyber Monday?
It's not even December, It's just, you have to wait.
Now's the time.
The Croc cowboy boots. The Croc cowboy boots. They're coming, Romaine. They're coming for you.
The Crooks.
The Crooks. Wow. All right, guys. That is a wrap. We're going to be back in less than an hour's time. Our cross-platform coverage will continue. Radio, TV, YouTube, and Bloomberg Originals. We'll see you for Beyond the Bell at 4 p.m. Wall Street time. I feel like when it comes to the markets, depending on the news flow, depending on the latest surprise, if you will. But it just as we kind of seem to think we figured it out, Bailey, all of a sudden something happens, either an economic report, some geopolitical upheavals, if you will, or disasters. It's been a hard year to figure it all out.
It's been tough, and it's been one of those markets where no matter what's going on cross assets, something is obviously benefiting and not so much to the downside for others.
Yeah, exactly. So let's get to it. We've got some key economic reports, or maybe one coming this way. So let's get to it, because we also just talked about what is the most read story on the Bloomberg about the billions of dollars wiped out in a well-known safety trade. But we want to talk about that, but we also want to get into this whole idea of, if the world's biggest bond market, could it be possibly at an inflection point? I'm afraid to commit. I feel like I'm at Vegas. I can't put it down. I can't make the bet. All right, to our markets roundtable we go. Back with us is Bloomberg News chief correspondent for global macro markets, of course, Liz Capel-McCormick, and then also Bloomberg News cross-asset reporter Emily Grafeo, both in our Bloomberg Interactive Broker Studio. Liz, I do want to start with you. The bond market has been so out of favor for such a long time. Are we at peak yield in your view? I mean, are things about to change, and can we believe it, buy it, when it comes to U.S. Treasuries?
Yeah, and you know me, I've been so reticent, because I feel like these people, I say it every time, peak yields, but...
It's like a guy who doesn't want to commit. Just saying.
Just saying. But I was just looking at the Bloomberg, our cool little IN function with the indices, and we're like, wow, November is like 2.6% as of Friday, the Treasury market's up month to date. And then the other 6 months before that were all down. So it's like, could this be finally, retribution? Here we go for the bulls. It seems like it. It seems like a high bar for the Fed. No, I could be wrong. For the Fed to tighten again.
Remember, it wasn't so long ago we were talking 6%.
Exactly. So, I don't know. I think maybe at the least we could say the worst is over. What I'm not so convinced at how quickly yields will go down. Further.
Well, that's what I was going to ask. Right now, we see swaps pricing in north of 3 cuts in 24. What is kind of driving that?
Yeah, it's funny, Billy. I brought my pack up. I've been reading all the 2024 outlooks, and one says massive cuts. One says massive cuts. One says just a few cuts starting at the end. So I thought that is going to be the key thing next year. Like, do we get a soft landing, and then the Fed only cuts kind of marginally, or do we get a hard landing and there's like 200 basis points of cuts, where you've got people forecasting the 2-year yield falling almost 200 basis points, and others saying only falls 50. So I think that's the thing. I mean, I have to go with our team. Bloomberg Economics says recession starts, so I kind of am leaning to that, but I think the Fed's going to be very slow to kind of gin up financial conditions too much, because they really want to say they beat inflation, right?
We did it, right?
Yeah, we did it.
All right, speaking of interesting trades this year, Emily, we've had a fair amount of guests, as we just talked with our TV colleagues, I feel like in the last few months, saying, hey, look for dividend-paying stocks. It's not been a great strategy, and congratulations, great story on the Bloomberg today.
Thank you. Well, I also had a lot of people coming and pitching their dividend ETFs to me, and I even went to a conference back in February, and it was so funny because the prior year the conference was all crypto ETFs, and then this year dividend ETFs and low vol strategies were like the big strategy that was being advertised. But the trade has not worked. We saw $60 billion flow in 2022 to dividend ETFs, and now this year we've seen less than $1 billion into the space as the strategy's underperformed, and that looks to be the slowest year for inflows into dividend ETFs.
Is stuff coming out as well?
Well, I mean, we're seeing a little bit of inflows, but just compared to every year since 2006, this is a record low year.
But Emily, talking about the differing years, does that kind of signal to you that the ETF market just kind of skates to what's hot and then gets left holding the bag?
Yeah, and a lot of times people are kind of late to the trade in ETF world. Like, they see that the trade is working.
Don't market time.
Exactly. Last year, as you were saying, Bailey, a few minutes ago, dividend strategies did really well. They outperformed. So then people piled in, only to find out this year that it would have been better to just sit it out in the S&P 500.
Liz, why do you think it's so difficult? Like, I was thinking about the Treasury trade just in general, like why it's been so difficult. Is it that we're just still like coming off the pandemic and trying to find kind of what's normal and where things settle?
Well, I would think, and I don't think I'm being Pollyanna, but I would say everyone, like you said, you were joking market timing, but that's what they say. You chase the hot money, the hot, fund managers. everyone plows into that, then they're wrong the next year. Like the kind of buy and hold tends to do it, 60-40, blah, blah, blah. But I will say, I was looking in my packet of Bloomberg has these new econometric models they're doing, and they were saying how a lot of things are different, right? I mean, look at the Fed, the ECB, everybody got inflation wrong, right? So, people are trying to decipher and fine-tune their models of what's different. I think some things are different, right? The supply chains now have changed, the onshoring.
President Biden just talking about it.
Exactly,
right?
exactly. So I think there is a lot of difference, and people using the old playbooks, or it just didn't work, right? That's why we're saying when we're talking about into next year, does it fall into recession, classic Fed cuts, or maybe not, right? So I think things are a little bit different now.
Are we in a spot where bad economic data is good for markets?
Yeah, it's funny. My son will be home sometimes. He was 23. He's like, I don't get it. It was bad stuff. Yeah. But I'm like, the market did good today, the stock market. And it's like, it's all about, can the Fed feel they're done? And are we going to have, let's hope a slowdown, not a terrible landing? But yeah, I think this housing today and stuff, although the stock market's mixed today, but bond yields went down, right? The housing data was soft. One of the regional Fed manufacturing numbers was softer. So I think bad numbers are going to be good for now, at least for the bond market. And the stock market, as long as the landing isn't too hard, I mean, this is Emily's thing. She can speak better to it, but that they should do okay, that these higher yields we've kind of held in with equity and risk assets kind of thing.
So Emily, to your story though, who got hurt? And I'm just curious about, we were just talking on TV about your story about if you weren't in the Magnificent Seven, you just, as much as people are like, no, the valuations, I mean, that's where the gains were. So there were some things, what were some of the reasons that some of these ETF dividend funds kind of said for why we didn't do so well?
Well, because a lot of dividend-paying stocks are in, sectors that are not
kind of value-ish.
Yeah, value, small cap. When you look under the hood of some of these funds, SDY, that's State Street's dividend ETF, 25% of the fund is in consumer staples, utilities, and healthcare. All of those sectors have declined this year. So these kind of areas that were seen as a safety trade, they didn't do well. And we saw Magnificent Seven. There's one ETF, VIG, Vanguard's Dividend Appreciation ETF, that had about a quarter of its fund in information tech, and it's one of the best performers. It's up almost 10%. So you can really see that if you weren't in tech, you kind of you lost out. But also, I spoke to a lot of RIAs who said that they're kind of trying to wean their clients off of dividend funds because the client wants that payout, that reliable payout of a dividend. But if they're in a strategy that the price of the fund goes down because the stocks aren't doing well,
it's not good.
The dividend doesn't mean anything. It's not worth it.
I mean, I go back years, I'm going to show my age, but it's like dividend reinvestment plans. You took the dividends, reinvested. It was considered a really smart strategy. It's just a reminder, though, Liz, that, again, we're trying to find our way forward on this. I mean, is there anything out there that makes you think, is it just if inflation continues to be or high, or if it spikes again, that the bond market could get into trouble?
Well, yeah, that's the real, what do I want to say, nemesis of the bond market, inflation. I mean, I think that's where a few of these outlooks are saying that's our big risk. And if something like we were worried about oil for a while, that's kind of calmed down. But if inflation stays sticky at even around 3%, I mean, the Fed has made clear,
2%.
We're not changing that target. 2% it is. So, I mean, they're saying we don't have to get there and stop, but we have to be 100% clear we're getting there and we'll stay there. So I think that's the problem. If inflation kind of goes to 3 and hovers.
Before we go, anybody saying that 2024 is a good idea for a dividend?
I haven't seen it yet. I mean, the fund managers I spoke to, they all defended their strategies. They said, it'll come around, It's not supposed to be up 20% in a year. That's not what it's made for, so.
Yeah, but it was a rough one, especially if you were betting it was going to be okay.
Yes.
All right, we're going to call it a wrap. Guys, thank you so much. Liz McCormick, she's Chief Correspondent for Global Macro Markets at Bloomberg News, here in our Interactive Broker studio. Emily Graffeo, cross-asset reporter at Bloomberg News, also in studio. You can check out her story, as we said, the most read on the Bloomberg all day today, and you can find it at Bloomberg.com. Billy, what are you keeping your eye on?
Really focused looking ahead to the end of the week with Powell, man. That seems to be where everyone I talk to is keeping their eyes on.
I bet he's going to say higher for longer. I bet he's going to say data dependent. Just going to say, this is Bloomberg, everybody.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We've got stocks trading mixed, and this update is brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. We've got the Dow, the S&P both lower. NASDAQ is higher. Energy, industrial, and financial shares are underperforming. Amazon leading gains in retailers as Cyber Monday gets underway, ahead, of course, Giving Tuesday tomorrow. Right now, the S&P down 5, drop there of 0.1%. Dow Jones Industrial Average trading lower now by 53 points. We do have the Dow down by about 0.2%. The NASDAQ Composite Index up 12 right now. That is a gain of just about 0.1%. 10-year 4.38%, with the 2-year that's yielding 4.89%. Spot gold up $11 the ounce to $2,012. That is a gain of 0.6%. West Texas Intermediate crude right now is trading lower. WTI down by 0.9%, $74.90 a barrel. So after 4 weeks of gains for U.S. stocks, how are markets shaping up for the new year? That question this morning for Caterina Simonetti, Senior Portfolio Manager at Morgan Stanley.
We should see some earnings recovery at some point next year, and we're actually positive for 2024. We just think that it's going to be a reasonable amount of growth, nothing too exciting, and all of that, considering that the data is going to support some type of rate cuts by the Fed.
And you can hear more of the conversation with Caterina Simonetti on the Surveillance podcast. You can download it wherever you get your podcasts. Saudi Arabia is asking others in the OPEC Plus coalition to reduce their oil output quotas in a bid to shore up global markets, but some members are resisting. Oil stocks trading mixed right now. We've got ExxonMobil shares down by just about 0.9%. BP is up 0.2%. Chevron shares down by 1%. Again, recapping, S&P lower by 4, a drop right now of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I'm just going to tell you, we're already talking with our next guest. We were behind the scenes about how to get coupons and good deals, so we'll get into it. It's off and running, the holiday shopping season. Adobe saying U.S. shoppers are going to spend up to $12.4 billion online today, Cyber Monday, after adjusting its initial forecast of about $12 billion upward based on stronger than expected spending on Black Friday and the popularity of buy now, pay later features that let shoppers stretch their budgets with credit. So let's get more to it and see what she's hearing and seeing when it comes to her own retail checks. Bloomberg Intelligence Senior Analyst for E-commerce, Athleisure, Off-Price Retail here in our Bloomberg Interactive Brokers Studio. Hello, hello. Were you out in full force over the weekend?
I was in stores, and I was surprised to see how crowded they were.
Well, it's so funny because I feel like on Black Friday, we were all here watching in it, and they were showing like empty parking lots. Macy's was closed for Thanksgiving, so didn't feel like there were those doorbusters where everybody was lining up really, really early. But all right, you've seen it firsthand. Tell us what's going on.
So Thursday stores don't open, and I'm thankful for that.
Me
because
too.
I don't need
Hallelujah.
to be there. But on Friday, we were out in stores, the whole team across coast to coast, and they were packed. And they weren't just packed in the morning. They got incrementally busier as the day progressed. And I think that's really because you don't have those doorbusters that end at 11. Like if you remember pre-pandemic,
crazy.
We were watching for, are they extending the doorbuster? The deals are on all day. Some of the deals were actually even there before Black Friday. It was for the whole week, and they've continued into Cyber Monday. So I think the retailers are adding deals. The consumers know that the deals are here, and they want to shop the deals.
Well, with that, how do deals change? I know that when I went shopping on Prime Day, that was my big focus, and it seems like the exact same deals are on Amazon right now that I saw last month.
Yeah, I mean, that's the whole point, right? They want to bring you the deal, try to get you to shop earlier, and if you didn't get a chance to catch the deal, you can come now to get them. But I will tell you that these deals exist on these key shopping days, so they do tend to go away. Like there were deals that I saw on Friday that I couldn't get on Saturday.
Really?
And there were deals that I saw on Black Friday that are the same today. So it really varies by retailer. In fact, some have added more deals. Like Vans, for example, they're 40% off site-wide today, and in the stores on Friday, it was 30% off apparel and buy one, get one half off on the footwear. So it really depends on the retailer.
What does it say that deals are back?
Deals are back, but...
I mean, did they ever really, really go away?
They've ebbed and flowed, and even though they're back, I would tell you that the deals are overall probably comparable to last year.
Okay.
They're not that much deeper, but this is probably the best that you'll get given the inventory position that we're in. Remember, we were way over inventoried earlier this year, and retailers have really brought that level down, so they don't have to discount as aggressively, but they still do have to offer discounts.
Let's talk about buy now, pay later, because is that just a big trend for big ticket items? Is that smaller, like you mentioned Vans, if I'm buying a $40 pair of shoes, am I spreading that out over 6 months, or is it really buy now, pay later focused on your TVs, your Xbox or PlayStation, bigger tickets?
It's everything. I mean, the retailers that have buy now, pay later are some of the retailers with like $20, $30 tickets, whether it's some of the apparel retailers. Even Amazon has buy now, pay later this year, which is new. So it doesn't matter what the ticket price is. It just matters on your credit to the extent how much buy now, pay later do you want to take on. Because you do have to make those payments within 2 months of time. Otherwise, you start to accrue interest.
It's interesting. I feel like growing up, it was like layaway. You would put things on layaway, and you could make payments, but you had to like finish paying it off by a certain amount. What does it say, though? Does it say the consumer is stressed? That if we're seeing a lot more of buy now, pay later? I mean, are we seeing that number go up incrementally?
We are seeing that number go up. In fact, I have the number right in front of me. Buy now, pay later from November 1st through the 26th was up 14% year over year, and that's Adobe's numbers. And on Cyber Monday today, it's expected to be up more than 18%.
Wow.
So people are using BNPL to make their purchases, but people are also traveling. So,
and you can do that with travel too.
Yeah, but if you're not making choices where you're not having to give up something, are you really under that much strain is what I question.
Well, how much of that jump in use of buy now, pay later, is that just people knowing that it's an option? Because I feel like a year ago, I would go into a store and they would throw it out there as an idea, but I wouldn't even consider it, versus now it's everywhere.
Yeah, I think they know, so definitely the knowing that it exists helps, but people have also been using it, right? So they're getting more comfortable with how it works and they're able to use it, and the teenagers are using it. I mean, if you ask me who was at the malls on Friday, it was the busiest section in the mall was near Abercrombie, Hollister, Victoria's Secret, Sephora. I mean, those were the stores that were mobbed.
Well, what's interesting, too, is in terms of buy now, pay later, is it cheaper to do that than throw something on a credit card? Like I was hearing somebody talking, maybe it was on TV earlier, that right now credit cards, if you're doing anything on credit cards, it's like the highest it's ever been in terms of rates. So I do wonder if there's some thinking of like, all right, I can't pay it all right now, but I can over the next couple of months, rather than putting on a credit card and you start paying right away.
Well, I guess it depends. If you are not looking to pay off your credit card statement at the end of the month, yes, BNPL is the better option. But if you are looking to pay it off, I'd get my credit card points in.
Yeah.
Who's winning right now based on Cyber Monday? Looking at the data that you're seeing, are there individual companies, individual stores that are seeing a larger kind of pull forward in demand or jump in demand?
So it's hard to say who will win because we don't have data, but what I can tell you is Amazon has clearly been a leader in online sales, and Cyber Monday is about online shopping. So we expect them to really take their share of the fair pie. Now, if you think about the department stores, the Macy's, the Bloomingdale's, and Nordstrom's, they've been losing share, but this is the time when people want to shop department stores. So they're probably pulling in some more share. And it's the retailers with the deals. If you have the deal, consumers are coming because they have been putting a list together and now they're ready to execute on that list.
Poonam, are you surprised by what you've been seeing?
I am actually. I didn't expect stores to be as busy as they were. I went into the mall thinking there won't be that many people out. It'll probably be busy early on and then maybe later in the evening, but kind of, soften up during the day. That wasn't the case. And people weren't just window shopping. They had bags in their hands. So there were lines at some of these stores wrapped around the store, which was encouraging to see because the same deals were available online. So you didn't have to go to the store to get the deal. I mean, I walked in stores where I looked at what I wanted and I placed the order on my mobile phone because I didn't want to carry the bag. So it was just interesting to see that the stores stayed pretty full throughout the day. I mean, I was surprised to see that.
Yeah.
And how does this continue to play out through the rest of the week, through December, into holidays?
I think that's a wait and watch situation. So did consumers really just make that list and go full out this weekend to do their shopping, and are they done? So how much of your shopping is done and how much is yet to remain is the question.
How many people are using Cyber Monday and Black Friday to buy for others versus themselves? Because I don't even know what I'm getting people for Christmas or the holidays yet, but I'm more than happy to go spend on my credit card.
Which you did.
Yes.
I think it's always been, it's not everyone, of course, it's a mixed batch, and there will be those people that will be going out the weekend before Christmas because they forgot to get a gift or something didn't show up or someone wants something different on their list today. So that'll happen. But Cyber Monday, Black Friday is a time when you shop for gifts and you shop for yourself because you have the deals. Now, the next 2 weeks, you may see a lull, but that's normal, right? And retailers will come back to you with more deals getting closer to Christmas. But then as you near Christmas, the deals will likely go away because at that time, you're crunched to buy. And this year, we have Christmas falling on a Monday, which means you have a full weekend to
get it all done.
Yes.
I was surprised walking through World Trade on my way home, and I guess it was around 5:30, 6 o'clock, 6:30, and it was packed. And you're right, people had bags, and I don't think it was just tourists or anything like that, but it felt like it was a pretty kind of busy retail trade. Poonam, thank you so much. Looking forward to your research over the next few weeks to see whether or not this all continues. Poonam Goyal, of course, Bloomberg Intelligence Senior Analyst for E-commerce, Athleisure, Off-Price Retail, joining us in our Bloomberg Interactive Broker studio. All right, let's get a check on the latest world of national news. Off to Nancy Lyons we go. She's in our 99.1 newsroom in the nation's capital. Hi, Nance.
Hey, Carol. A temporary ceasefire between Israel and Hamas is being extended. The original 4-day agreement was set to expire at the end of today, but Israel and Hamas have agreed to add 2 more days. As for today's hostage release, the Israeli military says 11 Israeli hostages have been handed over to the Red Cross and are heading for the border. Elon Musk, who has come under fire for endorsing an anti-Semitic post on X, spent his day in Israel visiting a community that was devastated by the Hamas attack on October 7th. During a live chat on his social media platform, Musk spoke of the callousness displayed by Hamas.
It's one thing if civilians die accidentally, but if it's another thing to revel in the joy of killing civilians. But that's not, that's evil.
Musk was escorted on the tour by Israeli Prime Minister Benjamin Netanyahu. More details are emerging after 3 Palestinian college students were shot over the holiday weekend while visiting Vermont. Burlington Police Chief John Murad says 2 of the young men were wearing Palestinian scarves when the suspect approached them and opened fire.
The young men were interviewed by detectives. They stated that the person had not made any comments to them and had merely approached them while they were walking down the street, essentially minding their own business.
The suspect, 48-year-old Jason Eaton, today pleaded not guilty to 3 counts of attempted murder and was ordered held without bail. President Biden says he knows prices are still too high, but he says investments made in the U.S. supply chain are paying off.
Today, our supply chains are stronger than ever, with backlogs, bottlenecks, and shipping rates at a 25-year low.
Biden spoke at the first meeting of the White House Council on Supply Chain Resilience. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. After 4 weeks of gains, the S&P 500 index is taking a breather today. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks mixed in quiet trade today, with the Dow currently down 26 points. S&Ps are off 2 points, and NASDAQ is higher by 23. The U.S. 10-year yield falls to 4.39%. Gold tops $2,000 an ounce. Oil trading in the red, and Bitcoin is lower by 1.8%. Among the main 11 S&P sectors, leaders were real estate and consumer discretionary. Energy and healthcare were under pressure, and leaders to the upside in the Dow, 3M and Intel, while Walgreens fell 3.5%. and led to the downside. In deal news, iRobot plunged 18% intraday on a report the deal with Amazon got EU competition warnings. And in the activist space, Elliott sent a letter to the board of Crown Castle. In other news, Affirm Holdings gained as much as 16% after reports of a strong use on Black Friday. And wrapping things up, Zscaler reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg. Type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes left in today's trading session. Carol Master along with Bailey Lipschultz. He is in for Tim Stanovic on this Monday. And, you know, Bailey, our next guest says consumers are growing gloomier, which is kind of interesting considering we just talked with Poonam, who said she was shocked by how many shoppers were out there, and they were shopping big time at retail throughout the weekend.
And a lot of that data showing that consumers spent up not only on Black Friday, but it does seem like Cyber Monday is still driving further sales.
Yeah, they're out there spending, right? So it's interesting. We'll see what he has to say. And it does make me wonder about consumers' just discretionary stocks, kind of what's the outlook if he thinks consumers are getting gloomier. Let's get to it. The Drive to the Close with Mace McLean. He is Chief Investment Officer at Frost Investment Advisors, a wholly owned subsidiary of Frost Bank, and they serve institutional and high net worth individuals. Firm, by the way, has about $5.1 billion in assets under management. Mace joining us on Zoom from San Antonio, Texas. Mace, hey, good to have you here with Bailey and myself. How is Texas?
Oh, it's doing very well. We still have a lot of in-migration from California and other places, and the economy's booming. It's doing very well here.
The economy's booming. So how do you then kind of cross that with this idea that consumers are growing gloomier, and our own BI or B economics team, Bloomberg economics team, are talking about recession next year. So give us an idea. Your economy booming, but you're a little worried about consumers, it sounds like.
I am worried about consumers. You know, consumer income is falling on a real basis, or it did last quarter. So I think the consumer's getting more and more stretched. And so I don't think the outlook's great there. And the thing that's been holding up probably the most, employment started weakening. And so I think that the consumer spending side to us is becoming more cautionary.
That makes, why are we seeing consumers showing up and spending Black Friday, Cyber Monday? It still seems like, at least according to the data, the consumer looks stronger underneath.
They're continuing to expand their credit. We're seeing credit card balances increase, and so and the saving rates is falling. We're seeing saving rate has fallen precipitously, and so they're increasing their leverage. I think also the discounting is drawing that in. I think that which has long-term effects on corporate earnings, but I think that companies are drawing them in with greater discounting.
Help me understand, though, we were just talking with our Poonam Goyal of our Bloomberg Intelligence team who tracks all the retail sector, and she said this increase in the use of buy now, pay later, that it's in some ways that consumers feel confident enough to do it and that they'll be able to pay it back in a couple of months before they've got to start paying interest on it, that's a sign of some confidence. Do you at all see it that way?
Yes, the other odd thing we've seen this year in consumer surveys is consumer has been very negative, but then they continue to spend. And so they're saying one thing, but they're acting another way. And they've been doing that through most of the years. So that's just been a consistent theme. And all the surveys shows consumers being very negative. But, we had a very strong growth in consumer spending in the third quarter. So they continue to spend in spite of being very negative.
And Mace, if that's the case, where should investors be putting money to work?
I don't want to get away in front of the year-end rally. Seasonally, it's great that we're going into the fourth quarter. And I think that I just want to enjoy the bullishness of the market for the fourth quarter. Now, on the bond market, we're kind of backed off a little bit. We've been buying bonds basically with both hands and with enthusiasm until a month or so ago. And with these current rates, I think that we've probably overshot on the downside on rates in the near term.
And when you look at kind of expectations, very much a Fed-driven market, very much a Magnificent Seven, and then a handful of stocks driving the market, do you expect us to get 3 rate cuts in 2024 like the swap market is implying?
I think that that's the key. I think you put your finger right on it. I don't expect 3 rate cuts. I don't think that's why I think we've overcorrected and had too big a rally in the rates market. We're down 40 to 50 basis points on rates. And I think that people aren't listening to higher for longer or believing, again, the Fed resolve. And I just don't see us seeing that sort of rate rally. And I think that brings a lot of risk to the stock market in the next year. So I want to enjoy this Christmas rally, but I think that as reality hits and we start looking at those rate cuts not materializing, that we have an adjustment coming in the market.
So why do you think, or why do you not think that maybe the expectations about possibly a recession next year is not already kind of baked into the equity market? Basically where we are in the S&P 500 is back where we were, right, in July, kind of late July. And then we saw, of course, a pullback, and then we bounced off the October lows. But why do you think that some of the expectations, right, market is a discounting mechanism, why do you think some of that expectation isn't maybe already priced in, especially if it's kind of a mellow recession, maybe even a soft landing?
Well,
yeah.
We do believe, we don't. I personally am very skeptical about a soft landing. They're so rare. And just to believe that it's going to happen after a 500 basis point increase, a historically very abrupt and very high rate increases, to believe that brings about a soft landing is just, to me, very difficult to get there, or at least assign a high probability. So we're very skeptical of that, and so we do think that the economy will weaken. But I think if you look back at what happened in the 70s, that we're not going to see rapid and large rate cuts. Probably this Fed is really about the economy will weaken. But I think if you look back at what happened in
No, go ahead.
Okay, I don't see that the Fed making the same mistakes and being aggressive. We do a soft landing. They're so rare. And just to believe.
We apologize, Mace. I think we're getting some feedback. So we're going to say goodbye to you early, and our apologies to our listeners and viewers. Mace McCain, Chief Investment Officer at Frost Investment Advisors, joining us on Zoom from San Antonio, Texas. I mean, this is the great debate. I feel like we just went through this with Emily and with Liz of our Bloomberg News team about, there's still some questions about the outlook out there.
Yeah, Carol, and this kind of goes back to what the market looked like really in 2016 and 2017, where it's a Fed-driven market. And what Jay Powell and the Federal Reserve will do with interest rates is going to drive where investors put money to work, because if you can park your cash in government bonds or even something like a Marcus account and yield 5.25%, there's not really much of a driver to get out there and buy dividend stocks like Emily was pointing out. Even if you're chasing some of the Magnificent Seven names, a lot of uncertainty seems to be the key of conversations I've been having with portfolio managers.
No, it's a really good point, because at some point it's capital preservation. So, if I can lock in 4 or 5% or something in an environment where there's still a fair amount of questions, because maybe soft landing, maybe recession, maybe the Fed starts to cut rates. It's hard to say. I feel like in about a week or so, we're going to get the jobs report. That'll be a very key statistics to see if indeed we are seeing the labor market slow down. Hey, folks, you are listening and watching Bloomberg Business Week on this Monday. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Amazon's $1.4 billion deal for Roomba maker iRobot is risking being derailed unless the firms fix a list of competition concerns highlighted by the European Union's antitrust arm. The European Commission in Brussels today issued a so-called statement of objections. iRobot shares, they are plunging today. We've got iRobot down by about 18%. Amazon shares, they are advancing by 0.9%. Tesla is suing Sweden and the country's postal service after a spiraling strike paralyzed the delivery of license plates to its cars. The month-long walkout among industrial union members at 7 Tesla-owned repair shops in Sweden has evolved into a storm of industrial action involving sympathy strikes by postal workers who are now refusing to handle Tesla-related mail, and deliveries have stopped license plates from being delivered from the Swedish Transport Agency. Lots of tech earnings this week. CrowdStrike Holdings will underscore how businesses are prioritizing cybersecurity after recent high-profile corporate hacks, while Salesforce and Dell Technologies are expected to post slower sales growth when they report this week, as well as overall corporate expenditure tightens. Among the names reporting after the bell today will be Zscaler. And those are some of the top company stories that we're following for you this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, in just a few minutes, we're going to head over to our TV colleagues. Carol Masterlin with Bailey Lipschultz. He is in for Tim on this Monday. Tim will be back tomorrow. Having said that, in a little bit, about 10 minutes or 15 minutes from now, we're going to get into the latest from the Middle East. Having said that, a big part of the story, yes, is the extending of the truce for another couple of days. But Elon Musk over in Israel, and it feels like, you know, we kid about it. It's Elon's world and we're just living in it. But it feels like every major story, Elon is somehow involved, and there's a good reason why he's involved in it.
Yeah, and this is a man who faced backlash after an anti-Semitic post on his platform X, which he freely runs at this point.
Totally.
But more than welcome with open arms in Israel on Monday, and it just is another signal, Carol, of the strength of Elon Musk and what he brings from a political and a business perspective.
Well, that's it, right? Like, he's at the kind of, I feel like, position of just so much in terms of technology that is either disrupting or not controlling, but is a big part of our world. And I think about certainly what he's doing with satellites, right, and Starlink, and linking people together. And we've seen that certainly in the Russian war in Ukraine. Like, this is important. I'm reading from our story because it's just really well said, but it says, for all of Musk's stumbles, world leaders cannot afford to criticize or alienate him for too long. The world's richest person holds the keys to powerful technological tools. And they talk about Starlink, his satellite internet provider, and that being at the heart of his political clout. Starlink, owned and operated by SpaceX, his company, and it has provided him with the ability to woo world leaders, from Ukraine President Zelensky to officials at the Pentagon, by offering essential communication services. So at a point, whether it's war in particular, it's a way of keeping people connected.
Yeah, and one of the things that we kind of discussed after the initial post on our desk was, is Elon Musk one of those people who is too big to cancel? And can that play out from a political standpoint, again, where he posts things, but everyone is more than happy to embrace him with open arms, again, given what he can bring to the table with Starlink and other technologies.
And I feel like some of our top tension points in the world, whether it's China, whether it's Israel, whether it's Russia, Ukraine, I mean, Elon Musk is involved in it somehow, and he does kind of have a front seat to it all, and is certainly speaking to those voices that matter. So we're going to talk about this a little bit more after the market close. Don't go anywhere, though, folks. We're going to talk about the markets right now with our TV colleagues. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic and Scarlet Fu. We're counting you down to the closing bell. Here to help take us beyond the bell. It's our friends Carol Masser, Bailey Lipschultz in today for Tim Stenovic, and a welcome to our audiences in full across all of our Bloomberg platforms. A relatively modest day in equity markets, a relatively modest day, pretty much every asset class out there, Carol, as I think a lot of folks still away on the Thanksgiving Day holiday.
Yeah, it feels pretty quiet still. What's interesting, though, and I feel like the equity market kind of meh, but it's interesting to see the movement down in yields once again. We just had Liz Capel-McCormick on just talking about, could it be that this is, we're growing into an environment where maybe yields have peaked, dare we say, and that it's quite a turnaround for investors in the U.S. Treasury trade.
Yeah, we've got some economic data on the horizon. Jay Powell at the end of the week, but just looking at the volume, about 15% below what's been average over the last 100 days on the S&P 500. Larger drop-off when it comes to the Dow. So to your point, Romaine, feels like people extending those Thanksgiving holidays ahead of what could be a busier week.
Yeah, you have a fourth straight day of the S&P and the NASDAQ moving less than 0.5%. Maybe earnings will shake that up a little bit.
I do wonder, too, about economic conditions. I mean, again, on a day where you're seeing a lot of kind of industrial stocks and a lot of kind of the, I guess, the real economy, if you will, kind of stocks moving lower, makes you wonder kind of what this market is pricing in. I mean, the biggest movers today are what? A lot of retailers?
Yeah.
Domino's Pizza?
I had to look up the tickers. That's how kind of a day it was when it comes to gainers.
That's exciting.
Well, it should be fun. We're going to have fun with Carol as she tries to walk us through some of the big movers on the day, which I'm sure should be interesting. Nevertheless, we get the closing bells here in New York. Modest losses across the board for all of the major indices, with the Dow down about 0.2% here on the day. The S&P down by a similar amount. The NASDAQ Composite down by about 0.1%. And the Russell 2000 down by 0.3%. And I should point out that the biggest laggard in terms of the big indices out there are Dow Transports, which dropped 1.3% on the day.
All right, so interesting. S&P 500, just looking at the breakdown, about 174 to the upside. Scarlett, we've got 326 to the downside, 3 unchanged. So a little bit safe to say more of a negative tone or risk-off tone when it comes to the big cap names.
Yeah, definitely things are skewed to the downside. You look at the industry groups in the S&P 500. Romaine, you mentioned the Dow Transports. The transportation index in the S&P 500 was the biggest decliner, off 1.6%. So that's railroad companies and airlines. Pharma is off by 0.8%. Food, beverage, and tobacco down 0.5%. Among the gainers, not a lot of exciting groups here. Real estate investment trusts up slightly. Retailers up by 1/3%. I mean, barely up at that point. And autos and components leading up the rear.
All right, folks, so let's get to the individual gainers. Drum roll, please. Affirm Holdings. You're going to like these, actually, Romaine. You're going to be pretty happy. Yeah. Up almost 16% at its highs today, finishing the day with about a 12% gain. We were just talking with Poonam Goyal of Bloomberg Intelligence about all the shoppers that are out there, about the rise, both on Black Friday and Cyber Monday, this buy now, pay later programs. Well, Affirm is the home of buy now, pay later programs, rallying and hitting a 52-week high in today's session. Shopify merchants posted record Black Friday sales. Adobe boosting its forecast for Cyber Monday spending. Adobe saying that orders using BNPL were up 72% on last year across the week going into Black Friday. And this was a report by TechCrunch. Affirm shares, by the way, up almost 200% year to date. And as we said, another 12% today. Another name that caught our attention, number 3 gainer in the S&P 500, Crown Castle.
Yeah, I'm
You're
into
gonna
this
like
story.
this.
Yeah.
I know you are. 3.5% higher. You know what they do, right?
Yeah, it's like cell phone towers, right?
Yeah, exactly, right? It's something we just kind of take for granted, right, that this stuff all kind of works. But they actually do it, the infrastructure to support all of our cell service. Well, top of the S&P 500, Elliott Investment Management, they've been pretty busy, confirming a $2 billion position in the company, sent a letter to the board. They want significant leadership changes. This is about a $47 billion market cap company, so we'll keep an eye on that one. And Domino's, you mentioned it. It's not just because I love some pizza. Number 1 gainer in the S&P 500, Cowen raising its price target on the stock to $430 from $410. Stock closing at $387 today. Bullish on Domino's U.S. turnaround as it models above consensus 2025 estimates. Now, I kind of like artisanal pizza. I like a really thin crust. I like it burnt. I like a coal oven.
Oh, that sounds really good.
Right?
Okay.
I know. Are we all hungry now? But I do like pizza. Like if you're in a crunch and you're in a car, a little Happy Meal or a little Domino's, it'll work.
I'm more of a fan of the Detroit style. There's a place by my old apartment that made a nice Detroit style pie. But looking at some of the worst performers, GE Healthcare among the bottom 5 performers in the S&P 500. This coming after UBS downgraded it to a sell rating. Remember, less than 10% of ratings on Wall Street are a sell equivalent. So when someone comes out outright bearish, that can drive shares to drop. GE Healthcare having its worst sell-off since May. Basis of the downgrade really focusing on valuation, a softer order trajectory, and tough comparable sales for the year ahead. So uncertainty for what had been one of the better performing spin-offs of the last 18 months. Another stock underperforming after an analyst downgrade, Lucid Group. This coming after Needham cut the stock to hold from buy, saying it's less optimistic about its ability to license its EV technology, saying it doesn't have faith in near-term demand. Shares down nearly 60% in the last year.
I wonder how much of this, though, too, is also just about just EVs overall, just kind of seeing depression. I mean, you saw the downdraft today in Fisker. Then I was even looking at like the lithium companies that had really been the big beneficiaries, and they dropped a lot today. I think Albemarle, what were they down? 6% on the day.
Yeah, worst performer in the S&P, Romaine, and that does seem to be kind of the issues and concerns around EVs playing out. And maybe there won't be the demand for a pull forward in demand as everyone kind of swaps out their
they're putting out the Cybertruck this week.
Yeah.
Did you get one?
I did not.
Is that going to happen, though? Is that really going to happen?
I mean, Elon Musk said it would happen.
There's a Cyber Monday deal on that puppy?
He's never launched.
Buy one, get one
free?
free?
No, never.
I just wish it had a bigger trunk space. I don't know if it was real, but I saw something. I saw a meme on X that showed it couldn't even hold a bicycle. Which
I saw
don't
that
know.
too, but I never know what to believe on the internet now.
Exactly. If you have a Cybertruck that looks like it's from a futuristic movie, at least have a real truck.
Better would actually be able to like tote a bicycle.
Yeah, exactly.
You know, okay, there you go. I don't know. There are no bicycles in the apocalypse, Bailey. What else you got?
Well, we got to be out running it. One thing to keep in mind, one of the worst performers among smaller companies, iRobot dropping more than 15%, biggest drop since January 2021. This coming after its $1.4 billion sale to Amazon received a EU warning on competition, warning that Roomba maker deal could hurt the market for robot vacuum cleaners. I don't know if you have one of those, Romaine, but apparently Amazon will be could be at risk of promoting their own product.
They're fun for the pets in the house.
Well, not my dog. She would tear that thing apart. That would last about 2 days here. We are, believe it or not, still in earnings season. Zscaler, the cybersecurity company, announcing earnings right now. Shares down in the after-hour session here. Here are your numbers here. For the fiscal first quarter, revenue did beat $496.7 million. That was slightly above street estimates, as was EPS, which came in at 67 cents, and the street was looking at about 49 cents a share. But here seems to be the issue here. The street was looking for a bump up in the forecast, and that forecast is relatively staying the same. The company's saying it sees full year calculated billings in that range that it had previously given of about 2.52 to 2.56 billion. The company also saying full year EPS will be at 245 to 248. That's actually slightly higher than the range it had given before here. But it looks like on the revenue side here, looks like a little bit of stasis, and I think that might cause a little bit of concern given that billings growth for this company have been tracking at above 30%.
Yeah, you wondered if there's an overall theme to be drawn from these cybersecurity companies, because Fortinet had really disappointed investors, and then Palo Alto Networks came in, and yes, it lowered its estimates for the full year, but there's the sense that it's in a better position than Fortinet. So the sentiment on this group was already fairly negative.
And I think Bloomberg Intelligence put out a great note on this idea of a lot of clients, I should say, the enterprise clients, looking to consolidate their software products, and that this could actually come at the expense of some of these standalone companies like a Zscaler or like a Okta, et cetera.
Yeah, that really makes sense, right?
Microsoft and Salesforce and those types of
things. Yeah, you think about all the different programs, right, and platforms that they're doing, and then at some point they've got to kind of consolidation make some sense. The one thing I will say about Zscaler, they've been on a tear. They're up 71% this year. About 6% of the outstanding of the float is shorted, and it's quite a pricey valuation. So this disappointment doesn't surprise me to see that kind of the shares coming down, because expectations were pretty high on this one, Bailey.
Yeah, I was going to make the same point. When you look at the numbers, they've beaten on EBITDA in 5 of the last 6 quarters, and they actually sold down more than 10% last year. So high bar, obviously, when your stock's ripping, and that does seem like we're playing out one of those price to perfection companies.
And don't forget, tomorrow we get a lot more of these names, including NetApp and CrowdStrike. I think Splunk is also on deck, and then you get kind of those broader software names like a Salesforce, a Workday, et cetera, Snowflake. So it'll be interesting to see kind of how, at least in my mind, corporate corporate spending, enterprise spending is holding up, whether the money is just shifting around or whether it's actually going down.
Yeah, people are cutting back, right? If they're starting to feel a little tight in terms of where they're
Do they
doing
get
their spend.
Black Friday discounts in the enterprise software space?
Yeah, is there Black Friday discounts for B2B?
What is it, Rakuten?
Is that what you're asking?
Rakuten, does it have a coupon? Like,
Rakuten.
you know?
Remember that? Remember that big Super Bowl commercial? Yeah, that really took off after that.
I don't
should be
know.
asking for it now.
Somebody's going to hook
How do
me
you
up with
pronounce
that. Isn't it Rakuten? It's Rakuten.
That was the whole commercial.
Oh, is it? I don't remember. You know, what can I tell
Jokes over Carol's.
I was too into the nachos. All right, we are going to. What did you say? It's a wrap. Our
we're running out of time.
Yeah. Our cross-platform coverage: radio, TV, YouTube, Bloomberg Originals. Folks, we will see you again tomorrow.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just wrapping up with our TV colleagues, wrapping up the markets on this Monday. A very quiet day, and I agree that it's kind of waiting for people to come back. Having said that, not quiet when it comes to the conflict in the Middle East. We talked about Elon Musk. He's been over there in Israel saying he'd like to help rebuild Gaza after the war in a conversation with Prime Minister Benjamin Netanyahu. He's been doing this on his social media platform X. Meantime, more importantly perhaps, or no doubt, Israel and Hamas agreeing to extend a ceasefire, which was initially due to end tomorrow morning in that war, following some tense negotiations over the release of more hostages held by the militant group in Gaza. So let's get to it with some analysis. We welcome Ariel Cohen, a non-resident senior fellow at the Atlantic Council's Eurasia Center, member of the Council of Foreign Relations. He focuses on international security, energy policy also, with particular expertise in Russia, Eurasia, and the Middle East. He's also the founding principal of International Market Analysis. It's a boutique political risk advisory firm. And for over 20 years, he served as a senior research fellow in Russian and Eurasian studies and international energy policy at the Heritage Foundation. He is on Zoom in Washington. Dr. Cohen, nice to have you here with Bailey and myself. The developments today, the significance of this extension, how do you see it?
Well, the Israelis are driven by domestic political pressure to get as many hostages back home as they possibly can. There's an old saying in the holy books that one who saves one human life as if he's saved or she saved the whole world. But the question is, when you save that one life or two or 50, and that extends the lifeline to the worst terrorist organization in the Middle East right now, maybe with the exception of Hezbollah, and prepares them for more rocket attacks, more kidnappings, and more torture and murder, are you really saving that life?
So you don't. So do you think it is wrong to extend this truce?
No, I do not think so, and I don't want to second guess people whose political jobs are on the line. I think Netanyahu is a goner politically after this disaster of October 7th. I do not envy, wouldn't want to be in the shoes of the Israeli chief of military staff, Israeli head of the army staff, the chief of staff of the military, and other people who will be under judicial committee review and investigation. But having said that, the main goal for Israel, as was articulated by Netanyahu with the support of the United States, is to eradicate Hamas. As long as Hamas is destroyed and eradicated, because the people of Gaza, the Palestinians, both in the West Bank and Gaza, deserve better than the murderous cult that raped and tortured and killed children, women, and old people on the 7th of October.
But we are also, our understanding is that it's not just Hamas holding hostages. So it becomes much more complicated, as you know. So what do we need to understand about that if it's not just Hamas?
We need to understand that the terrorist organizations in Gaza and sometimes in the West Bank treat hostages, and we saw it with ISIS, by the way, as well. They treat hostages as a commodity. They buy them and sell them. They're criminal gangs and clans that take these hostages and resell them. And it's a tragedy for these people, absolutely. It demoralizes the Israeli population. People have nightmares. People have essentially PTSD. hundreds of thousands and millions of them. Having said that, it's the job of the Israeli security to track down these hostages and those who hold them and put as much pressure as possible, negotiate if you can, or put other pressure if you need to, in order to bring the hostages back.
Dr. Cohen, what's next? Do we see the truce continue to be extended every few days? Kind of what can help end the conflict, or what happens on the path to ending the conflict?
The number of hostages left, I think, is around 200, and they agreed that in the exchanges, they're going to release 10. So 10 hostages a day, 200, so it's 20 days, 3 weeks. After that, it will be the decision of the Israelis whether to continue the military action. We see already that the United States is undermining its own credibility by grabbing Israel by the hand and saying, oh, you cannot do this, you cannot do that. We are undermining our credibility vis-a-vis Taiwan, vis-a-vis Ukraine, and others.
Just for a little clarification, we are seeing domestic pressure here in the U.S. Senator Chris Murphy of the state of Connecticut has said that the U.S. should consider attaching strings to future aid to Israel on its compliance with international humanitarian law. So that's what you're addressing at this point, you think that doesn't make sense?
I think that job one, as was agreed between the Israeli government, democratically elected Israeli government, and I'm not a fan of Netanyahu. Please let be very clear. I think the man utterly failed even before the attack of October 7th. He split the country. He split the people. He tried for a power grab that should never have been allowed. But right now, job one is destroying Hamas. And if Chris Murphy, whom I respect, I testified more than once before him, he is a decent man, but he is either misled or playing politics. This is not the time to have an academic discussion about humanitarian international law for a simple reason. We did not have strings attached. When our military went to Mosul, when we went to Raqqa, and when we went to Fallujah. We cannot fight terrorism. And these are murderous people. We cannot fight them with two hands behind our back.
And one of the things that's making headlines is Elon Musk making a trip to Israel. How does that, in your view, just given what he brings to the table with Starlink, impact the path forward and how this conflict can continue to evolve?
Elon Musk has an anti-Semitism problem, not himself, hopefully, but the X, the Twitter. For example, according to Cyberwell, a monitoring organization that monitors Jew hatred online, the reports of anti-Semitism in Twitter, only 10% of anti-Semitic tweets are removed, whereas Meta and even TikTok has 91 and 98% removal rate respectively. So until Elon Musk demonstrates conclusively that he keeps Jew haters out, and he is trying, because just today the trending, whatever it's called, the trending message, the hashtag Hitler was right, was removed by Twitter, and thank him for that. But he needs to understand that to be a credible social platform, he cannot and should not allow racism and hate on his platform.
And many would agree, no doubt about that. Dr. Cohen, thank you so much. My apologies that we've run out of time, but Dr. Ariel Cohen a non-resident senior fellow at the Atlantic Council's Eurasia Center, and as we said, also the founding principal, of International Market Analysis, which is a political risk advisory firm, joining us on Zoom in Washington, D.C. All right, you are listening and watching Bloomberg Business Week for the latest on the war between Israel and Hamas. The ceasefire, though, that has been extended for another 2 days. So now we're moving into Thursday. Thursday. But for the latest, you can head to the Bloomberg terminal and also check it out at Bloomberg.com. Carol Massar along with Bailey Lipschultz, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting earnings out of software security company Zscaler. Shares are down after hours. Zscaler falling by roughly 6.5%. Zscaler did boost its revenue guidance for the full year, and that guidance beat the average analyst estimate. But after hours, shares selling off. Zscaler down now by 6.6%. Treasuries extended their powerful November advance as traders weighed mixed government debt debt sales amid bets that the Fed is done with interest rate increases. Industrial and financial shares underperformed today. We had Amazon leading gains in retailers. S&P 500 index down 8, a drop today of 0.2%. The Dow lower by 56 points, down 0.2%, while the Nasdaq Composite Index was down 9, a drop there of 0.1%. 10-year yield 4.38% with a 2-year 4.88%. Gold up $13 the ounce. Spot gold now at 2014. That was an advance of 0.7%, and a further retreat for West Texas Intermediate crude. WTI down today by 0.7%, now at $74.99 a barrel. So again, recapping, red on the screen after 4 weeks of gains for the S&P 500 index, a down Monday. S&P today lower by 8, a drop today of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Bailey Lipschultz. Bailey is in for Tim Stanovic, who is off today. So do you remember when Amazon a few years back started talking about getting into healthcare?
Carol, I remember I covered healthcare years ago, and it was the Amazon boogeyman is what we called it. Anytime we talked to portfolio managers, if the name popped up, you would watch stocks, whether it was devices, whether it was drugs, you name it, sell off immediately.
Right, because they were so afraid that they were going to own it, disrupt it, take it over. And that has certainly been the situation for healthcare. There's a lot of iterations, and while all of this may have inspired fear in the healthcare industry, it apparently does no longer. So let's get into it. It's a story by Bloomberg's Matt Day and Drake Bennett. Longtime Bloomberg Amazon watcher and reporter is Spencer Soper, and he joins us now with more. Spencer, by the way, technology and e-commerce reporter here at Bloomberg, and he joins us on Zoom from Seattle. Spencer, it is so true. Like anytime we heard, Amazon getting into something, it was like, oh, there it goes. Give us the backstory about Amazon and healthcare.
Yes, so the first time I heard about Amazon and healthcare, at least when it first came on their radar, this is ages ago. I can't even place them here, but there used to be a drugstore.com that Walgreens purchased and I think shut down. But initially, Jeff Bezos was interested in pharmacy because he saw it as a way to entice older shoppers to share their credit card information with Amazon. That's how old the idea is with Amazon. It goes way back before older shoppers embraced e-commerce out of fear of putting their credit card information into a device. So that it has a real deep history at Amazon. Just all of their efforts through the years haven't garnered the attention or usage that everyone feared, like you guys were just talking.
Well, and
so they're basically a Me Too player now.
Well, and I think about Haven, right? When we talked about Amazon, Berkshire, and J.P. Morgan getting ready to, they were so, kind of disgusted, I think, maybe safe to say, about healthcare and health insurance costs. So I remember, Bailey, when that came out too, and I was just like, okay, if anybody can do it, those three can do it and figure it out.
Yeah, you were wrong, just like the rest of us. There was a lot of star power and brain power, and everyone got excited, but there wasn't much of a plan. And that's the thing. Everyone just it's so big and such a big spending category that executives salivate thinking of the way to either get in or a way to minimize their own costs. Because that was another thing that they were thinking when you mentioned that Haven initiative was you just had these three major employers think of a way to muscle in and lower their own costs for themselves, which would be a win in and of itself.
Right.
And again, that petered out. It just was kind of like a lofty idea with no real plan or execution. And I think a big part of the theme of the story that ran today is just this kind of typical tech industry hubris where, we're very smart, we can innovate everything. But once they come in, they realize it's pretty complicated. A lot of the solutions they can quickly come up with, they're already on the market, and they basically have to buy their way in, which is what Amazon did with One Medical and PillPack.
Well, I remember back in 2018, again, covering healthcare, analysts were comparing it to a scene out of Game of Thrones when they announced plans to acquire PillPack. And the concern was that they could get into everywhere, whether it was devices, drug distribution, you name it, that's where Amazon could be just because they interrupted e-commerce to the extent that they have. Spencer, I guess when you look at the company, when you look at kind of this entire kind of aura of Silicon Valley and the ability for these giant companies to take on any industry, was there overexcitement? Was there just kind of an ability to talk about what you could do without actually laying out how you would get there?
Well, overexcitement and also a lack of appreciation for complexities. And so what you bring up the comparison with e-commerce, that's a two-sided equation. I need something, Amazon's willing to sell it to me. That's very simple. When you start talking about things like healthcare, you have so many other parties involved. So I need care. I have my insurance provider. It's often through my employer. Then my doctor. You've got so many more parties involved, and they're so entrenched. And so just to make a compelling proposition to that end user, the consumer, you have a lot more stuff to cut through than you do with a standard consumer product. Right. So that's a big part of the problem as well. And that's where a lot of this stuff initially flopped, was they just could. Maybe they get employers on board and entice employers, but the actual employees weren't using it, or they had something that employees might want, but they can't get the insurance providers to get on board. So they just ran into one obstacle after another trying to launch these things, and that's why they're just kind of trying to do basically the same things a lot of other companies are already doing with their online pharmacy, which other folks are doing, discount drugs, which everyone and their brothers does, and now One Medical getting into primary care.
Well, and what's interesting, and to be fair, I mean, Amazon's not alone, right? Apple and Google's Google parent Alphabet, they've also, put time, talent, money into trying to disrupt healthcare as well. So all of them are going after, listen, massive market, we all need healthcare, it's never ending, and it just keeps getting more and more expensive. So why wouldn't they want a piece of it? What's cool about this story is that, Bloomberg went into found conversations with current and former employees, patients, competitors, industry analysts to kind of try and figure out why Amazon, Spencer, hasn't been able to figure out. And I thought was interesting, it's right at the top of the story about a culture of hubris. Here's a very, very successful company that has figured out so much and is so pervasive in our world, saying, I got this. I don't need to maybe hear from the experts. That was part of the problem, it sounds like.
Yeah, and those days are coming to an end at Amazon, where you had Amazon founder Jeff Bezos was willing to play the long game, willing to invest money and be patient and wait, as long as they were getting some steady strides. But now Amazon's moonshots under Andy Jassy, and the market in particular, they want to see Amazon more focused. They're like, look, make up your mind. How many things are you going to go after at one time? Let's get some sense of focus, and that's what's different now, and that's where that hubris is maybe diminishing. The idea that you can fire in 1,000 different directions simultaneously, hoping that something's going to pay off in a big way. Amazon's having to kill off a lot of these things that they, before they wouldn't think anything of building a team of hundreds of people and supporting it for years and years, looking for a way in. And that seems to be coming to an end.
And I would say, Bailey, too, having covered healthcare, I mean, it's one of those sectors where the government's involved, the medical profession, there's rules, there's regulations, there's way you can do it, there's, co-pays. I mean, you go to a doctor's office and they talk about just the amount of paperwork that they have to do. It's not just something you can be brash in and necessarily take over.
No, and I think that's the thing that we've seen play out. And you look at even a story from earlier this year, Apple getting into the glucose monitoring industry. We saw initial sell-off in those companies that make those pumps and make insulin monitors.
Right.
But the initial reaction afterwards, you talk to healthcare specialists, is it's not easy. It's not something that just because Apple says they can do it, you need to worry about necessarily.
No, it's a really good point. Hey, Spencer, just got about 45, 50 seconds. So where has Amazon done well when it comes to healthcare?
Well, they do have Bill Pack and One Medical now, basically companies that they've acquired. So now they have to try to, carry the momentum of those companies. The idea of online pharmacy is still promising. Save people a trip. I think that's going to mostly be for, maintenance medications, things that people are accustomed to taking. But you have to understand there's still value in going to a pharmacy and speaking with the pharmacist. People still like that and see value in that, and they're so prevalent. They're everywhere. So that's still a tough proposition for Amazon as well.
Yeah, it's not like just buying some shampoo or toothpaste. It's a little bit different. Spencer, thanks so much for weighing in on this. That is, of course, our Spencer Soper, technology and e-commerce reporter here at Bloomberg News, joining us on Zoom from Seattle. Highly recommend you check out Matt Day and Drake Bennett's story. You can find it at Bloomberg.com and, of course, on the Bloomberg terminal. It is one of those areas, I feel like education and healthcare are two areas that still can be disrupted. I felt like we started seeing it with education in the pandemic, everybody online, although I feel like it's slid back. But I just feel like healthcare, there's a lot that we can probably do more efficiently.
And I think if you talk to anyone investing in the space, they would 100% agree with that.
Right? And just so looking for somebody to kind of do it differently. All right, everybody, let's get an update on world and national news. Back to DC we go, and Nancy Lyons in our 99.1 newsroom. Hi, Nance.
Hey, Carol. Today was scheduled to be the last day of a 4-day truce between Israel and Hamas, but Qatar says the two sides have agreed to extend their ceasefire for 2 more days. This is U.S. National Security Council spokesman John Kirby.
The humanitarian pause in Gaza, now in its 4th day, will be extended for another 2 days through Thursday morning, Israel time. This humanitarian pause has already brought a halt to the fighting, together with a surge of humanitarian assistance. Now, in order to extend the pause, Hamas has committed to releasing another 20 women and children over the next 2 days.
Kirby went on to say they hope to see the pause extended further, but depending on if Hamas does release more hostages. Today, Hamas released 11 hostages, no Americans, while Israel freed 33 Palestinians. Today, Cyber Monday, is expected to be another strong shopping day. Poonam Goyal with Bloomberg Intelligence says shoppers are surprising analysts this year.
We were proved wrong. I mean, you saw the numbers. Adobe had pointed to 7.5% increase in sales over Black Friday. They raised their estimate for today, with sales rising by as much as 9.7% today. So those are pretty good numbers coming out of the weekend. And we think if the consumer can travel, they can shop.
Poonam Goyal with Bloomberg Intelligence. Adobe predicts overall holiday season revenue to increase 4.8% compared to 2.5% growth in 2022. 98 Christmas trees, more than 142,000 twinkling lights, and nearly 34,000 ornaments deck the halls of the White House this year. First Lady Jill Biden today unveiled her theme of magic, wonder, and joy. She's hoping every room will capture the pure, unfiltered delight and imaginations of our childhoods. The decorations are also giving a nod to the 200th anniversary of the publication of the book and poem, 'Twas the Night Before Christmas. Global news, 24 hours a day.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with the developing story headline right off of the Bloomberg Professional Service. Shein has confidentially filed for a U.S. IPO. This, according to the Wall Street Journal. It is a fast fashion giant, and again, Shein has confidentially filed for an IPO. This, according to the Wall Street Journal. We'll have more as more details become available. Wells Fargo has announced formal plans to expand its Hudson Yards office in New York City, with about 2,300 employees expected to move into the new space. It was a down day on Wall Street today, with the Dow, the S&P, NASDAQ all declining. S&P 500 index kicked off the new trading week with an 8-point loss. The Dow Jones Industrial Average did move lower today as well. We had the Dow Jones Industrial Average declining by 56 points, down by about 0.2%. The S&P also down by 0.2%. NASDAQ was down 9, drop there of 0.1%. Russell 2000 lower by 6 points today, a drop of 0.4%. 10-year yield 4.39%, with the 2-year yielding 4.88%. Gold up $13 the ounce, higher by 0.7%. And West Texas Intermediate crude down 0.7, 75.04 a barrel. As for the market backdrop and the economic outlook, Mace McCain is Chief Investment Officer at Frost Investment Advisors. Right here on Bloomberg Business Week, he told us he is cautious on the economy.
I am worried about consumers. You know, consumer income is falling on a real basis, or it did last quarter. So I think the consumer's getting more and more stretched. And so I don't think the outlook's great there. And the thing that's been holding them up probably the most, employment started weakening. And so I think that the consumer spending side to us is becoming more cautionary.
And you can hear more of the conversation with Mace McCain on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Again, recapping, stocks lower today, an 8-point drop in the S&P, finishing the Monday session at 45.50, down 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet. Charlie mentioned Shein, which is the China-founded online fashion company, has confidentially filed to go public in the U.S. Could be one of the biggest IPOs in years. This is coming from the Wall Street Journal. It's been not a great IPO market, Bailey, to say the least.
It's been sleepy. We've had, I think, 4 big ones, and only 2 are trading above their offer price. Birkenstock has done nothing. ARM has really struggled, but Instacart has done nothing as well.
Good,
so
yeah.
In need of big deals, in need of money being raised, and this is interesting. But I will point out, Bloomberg did report earlier in the month that they could target up to a $90 billion valuation.
That's pretty significant.
Yeah.
All right, so let's get to it. In kind of a connected story, we wanted to take a look at the environment for startups. Obviously, Shein is in a different place, actually getting ready to go public, according to the Wall Street Journal. But when it comes to the venture capital market, it's been pretty tough. Nearly 1 in 5 investments was a down round. We're talking about recent fundraisers. In terms of dollars raised, total VC funding has now declined in 6 of the past 7 quarters. This is coming from Carta, which tracks this stuff. So let's head to Stockholm, Sweden, where we find on Zoom Unconventional Ventures co-founder and general partner, Nora Bavey. Nora, nice to have you here with Bailey and myself. We said it's been a slow IPO market, and they're not necessarily doing well once they go public. Talk to us about the VC market and what you guys have been seeing.
Thank you so much for having me. And yes, it's definitely slow, but when it comes to progress in terms of investing in the best businesses, in terms of also acknowledging the best type of founders behind the solutions, we're really not seeing any progress. So I'm the co-founder and general partner of Unconventional Ventures, which is considered to be Europe's first impact fund with a diversity lens. And we've been doing these funding gap reports for the last 5 years, looking into what the ecosystem has been looking at, not only for the last 20 years, but particularly since 2017, where we see incredible changes happening in the ecosystem. And unfortunately, we keep coming back to the same numbers over and over again. Funding for all female founding teams are literally on a slippery slope in terms of the numbers sticking at around 1% in the Nordics. And that's being considered one of the most gender equal regions in the world. Now, if we look at Northern Europe, that number shifts between approximately around 2%, even that minimizing down to 0.9% in some markets. And if we compare the global numbers, we're looking at the typical 2%. That is definitely not changing. And what is really astonishing at this year's report is that when we look at mixed teams, because in general, we see a lot of excuses being made for, well, you know, when female founders are part of a mixed team, we do know that they get funded. But when we look at the Northern Europe as a market, what we see as that is actually even becoming smaller in terms of share of capital versus percentage of rounds. And then all in all, when we look at the amounts, we see that even coming down as little as 4.4%.
So net in terms of, and you guys, it sounds like you looked at Northern Europe in terms of the survey base, if you will, that when it comes to female teams, they're getting nothing when it comes to VC funding. It really isn't changing much. And even if you have a mixed team that includes someone like a female founder, a female individual, it's still not great and it's actually coming down. Why is it not getting better?
Well, I wish that we were talking about, you know, why are we seeing too little progress? The problem is we're not seeing any progress. And I think we come down to the same kind of conclusion over and over again. Representation matters. And if you do not think that it matters, then you're probably well represented. So I think we need to go back and look who are the check writers, because we do know that there is a very clear correlation between who writes the check and who receives the check. And when it comes to decision makers being more diverse, meaning beyond white men, that is not changing at all. And even that being, we see more women coming into the financial industry. Something is also happening at senior levels because more and more women are actually leaving senior positions in the last couple of years as well.
Nora, how does this play out, though, in a year that has been pretty difficult for VC investors and going into 2024, where everything we talk about is how difficult it is for anyone to get funding, let alone investors in management teams that aren't well known and aren't, as you mentioned, that don't look like the investors that they're courting?
Well, I think we need to create this bottom line, meaning if we're really about making great business decisions, then we're clearly not making the best kind of investments because they are skewed and biased towards a particular community and group. With that being said, when we talk about what type of founders are getting funded, what we need to also acknowledge, what kind of problems are they really solving? Is it nice to, or is there a need to? And if we look at the global challenges now, really, you know, accelerating in an unprecedented time and pace, what we know with that is that we're really not targeting depth of the problems that need, and then going back to representation, that's why we need to fund more diverse founders that have insights to the problems.
Nora, we only have about a minute left here. Forgive me, but I could go back 2 years, I could go back 5 years, and I would have the exact same conversation. So I'm trying to understand why the needle isn't moving. What's the problem? Is it the pipeline? Because we've also done the stories about female-led VC firms where they aren't necessarily more inclined to give money to women, backed or women-created businesses. So I'm not quite sure what's the problem, and only got about 40 seconds left here. Why isn't this changing?
Before I would say venture capitalism isn't the problem. Venture capitalists are the problem. And I think all the unconscious bias training that everyone is enacting in is not working. And I think in terms of conversation, yes, we've been talking about this problem, but that's exactly the problem. We keep on talking, but we're not funding. So we're over mentoring these founders, but we're not investing. And that is the final thing that is moving the needle.
Right. Mentoring isn't money. Mentoring is just, hey, here's what you need to do. But ultimately, people need the money to kind of move ahead. Nora, really appreciate some time with you. Nora Bavey, she is Unconventional Ventures co-founder and general partner, joining us on Zoom from Stockholm. No, the numbers, Bailey, are jarring, but I do feel like we had this conversation throughout the pandemic that a lot of things would change. in terms of the importance of diversity and inclusion, had a lot of important conversations, and yet here we are.
Exactly, and you mentioned this goes back years. This is not a new phenomenon by any stretch.
Yeah, so I'm wondering, why isn't it changing? All right, everybody, you're listening and watching Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. The fast fashion giant Shein is confidentially filed for an American IPO, that according to the Wall Street Journal. Wells Fargo has announced formal plans to expand its Hudson Yards office in Manhattan, with about 2,300 employees expected to move into that new space. Blackstone Group CEO and co-founder Steve Schwarzman says his firm has seen a bevy of buying opportunities in real estate across Europe. Bloomberg Radio caught up this morning with Schwarzman at the UK's Global Investment Summit in London.
European real estate is under pressure, in large part because interest rates were so low here for so long. Sometimes in countries they were negative, so the borrowing costs to own real estate were next to nothing. And now it's closer to 6%. So if you have to carry a whole portfolio that used to cost you next to nothing at 6%, they need to sell things.
And You can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. And Blackstone shares today did fall by just about 0.2%. Lots of earnings this week. We did hear from Zscaler after the close of trading. The stock is down by just about 6%. This week we'll hear from CrowdStrike Holdings, Salesforce, and Dell Technologies. And those are some of our top company stories at this hour. And this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Bailey Lipschultz in for Tim Stenevec, hanging out with Carol Masser. Right now, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Nancy.
Thanks, Bailey. The pause in fighting between Israel and Hamas is being extended for another 2 days. White House National Security Council spokesman John Kirby says it's a good sign.
We would, of course, hope to see the pause extended further, and that will depend upon Hamas continuing to release hostages.
John Kirby says in the next 2 days, Hamas says it will release 20 women and children, with Israel also releasing additional Palestinian prisoners. Today, 11 hostages were released by Hamas. None of them were Americans. Israel released 33 Palestinians. Billionaire Elon Musk says he'd like to help rebuild Gaza after the Israel-Hamas war. Today, he visited one Israeli community that was targeted by Hamas in its October 7th attack. He was escorted by Prime Minister Benjamin Netanyahu. Bloomberg's Ed Ludlow explains why Musk toured the site.
The context here is that earlier this month, Musk made a post on X that appeared to endorse another user's anti-Semitic theory. And Musk has since said that he is absolutely not anti-Semitic. A number of people have spoken up on his behalf saying he is not anti-Semitic. But that's the backdrop of why he's there and what he's engaging with.
Again, Bloomberg's Ed Ludlow. Adobe Analytics is predicting Americans will spend up to $12.4 billion today, also known as Cyber Monday. That's on top of the better-than-expected spending on Black Friday. One thing they may be driving all this spending this holiday season is how much cheaper it is to drive.
Gasoline prices have been falling for 60 days straight. That's the longest streak in more than a year, and it's allowing many consumers to shift that spending at the pump to retail just in time for the holidays. AAA says the average gallon of regular across the country costs $3.25. That's more than 60 cents below the peak from mid-September and about 30 cents cheaper than this time last year. 14 states now have average gas prices below $3 a gallon. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Bailey and Carol.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in the nation's capital. Carol Master along with Bailey Lipschultz in for Tim Stenevec on this Monday. Tim will be back tomorrow. Hey, just looking at some of the stories that are on the Bloomberg, I thought this was interesting. Jack Ma getting back into business with Ma's Kitchen Food, which is kind of, I was like, wait, what?
Double take, definitely, because it sounds, it's the last name, but it could be a Southern chicken joint, personally.
It could be. You're driving down south and you pull over on the road. Co-founder of Alibaba, of course, but he set up, and forgive me if I mispronounce, Hangzhou Ma's Kitchen Food last week with an initial registered capital of about 10 million yuan or 1.4 million. This is according to corporate database. The business involves the sale of packaged agricultural products, according to information on China's National Enterprise Credit Information Publicity System. That's a mouthful, but it's kind of interesting because I feel like all of these big tech guys or tech individuals over in China, they've been, under Chinese government radar, I guess you could say.
Well, I remember
delicately
when there was a lot of concern around Alibaba stock because Ma hadn't been seen for a while. Then he popped up on a video at a conference, and there was much debate on the equity side of things.
Group.
Exactly, Ant Group, everything going on with that. So interesting to see Jack Ma get back into the business world with food restaurant.
Doing something different, right? Yeah. If you go back to, and I had to kind of like read through this story again, remembering he made some comments about China's outmoded financial system, and that helped trigger kind of